start a business together as I teach you how to create financial statements for your own small business so that you know how your business is performing. So let's say in the first month, we bought a computer for 30,000, we bought furniture for 15,000, then we also incurred a marketing expense of 5,000, and then we paid out a salary of 30,000. So assuming in the first month we made sales worth 50,000 shillings, the rationale for accounting is debits and credits. I'm sure you've heard of that before. So it doesn't mean that debits are bad or credits are bad. It's simply the dual nature of accounting. So the acronym we use is DLA. You see this? DLA. So it simply just means that dividends, expenses, and assets are debit entries. Equity, revenue, and liability are credit entries. And that's the whole shebang of accounting. Like, there's nothing extra beyond this. So what we're going to do, we're going to create T accounts. T accounts are journal entries that are going to help us to create a trial balance. A trial balance is what we normally create to make sure that we didn't miss anything, any expense, any income. So if the trial balance balances, then that means our accounts are correct. So now, the first expense that we had was a computer, which is an asset. And you see, assets are debit entries. So you come here and you see that your computer is going to get a debit entry. But what did we buy the computer with? We bought it with cash. So the computer is going to be a credit entry on the cash account. The next one is furniture. So furniture is the same way. Debit entry, credit entry on the cash account. So now when it comes to marketing and salaries, these are expenses. So expenses, if you come back to our rationale, expenses normally get a debit entry. As you can see, salary is going to get a debit entry, but what did we pay with the salaries with? We paid them with cash. So that's why the salary is credited on the cash account. Same thing.
What is bookkeeping? Bookkeeping is the process of recording, organizing, and maintaining financial transactions for a business or organization. It involves keeping track of all financial transactions, including purchases, sales, receipts, and payments, and organizing them into categories such as assets, liabilities, expenses, and revenue. The purpose of bookkeeping is to provide accurate, up-to-date financial records that can be used to make informed business decisions, prepare financial statements, and file tax returns. Bookkeeping is often done using specialized software, but it can also be done manually using ledgers and spreadsheets. Some of the key tasks involved in bookkeeping include recording all financial transactions, reconciling accounts, generating financial reports, managing accounts payable and accounts receivable, tracking inventory, managing payroll, preparing tax returns. Overall, bookkeeping is an essential part of running a successful business.